Welcome to Future Proof Business. Smart strategies, real insights, and tools to lead and scale in a fast-changing world. Let's future-proof your success.
Welcome to the Future Proof Business Podcast. I'm your host, Daniel Rosenstein. Today, I have the honor of interviewing Courtney Epps. Courtney, thank you so much for coming on the show today.
Thank you so much. I appreciate you having me.
Definitely. Can you share a little bit about your background and what is it you do with the audience?
Yes, so I am a tax strategist. We have a full service accounting firm here in Greer, South Carolina. We do about 2,500 tax returns a year. And really my focus is how do I free up money for business owners? We have clients from anywhere from startup, just getting started, zero income, all the way up to $15 million.
Oh, it's amazing. Congratulations on your success.
Thank you.
Can I ask you what inspired you to go into this, to help home-based business, with their tax strategies and stuff?
Honestly, I actually didn't want to be an accountant, and it's probably the last thing I think I probably wanted to be growing up. But I was going to go to medical school, and I decided last minute to stay home. And it was a highest paying career that I could get in my area and still continue to go to that college. And I worked my first tax season and realized that I was like, this is not for me. I don't want to work 120 hours a week. I don't want to take time away from my family. And this is just not it. And so I quit right in the middle of tax season and swore I was never going back to accounting. And then I ended up several years later starting an insurance agency that led to adding on an accounting practice, because what I was seeing in the insurance world is that people aren't getting the support that they needed from their accountant, and their books were wrong. So I couldn't quote them properly. They were overpaying. And so they led me to have to start an accounting practice to help them out. And then actually I ended up selling that about 14 years ago, and the guy I sold it to stopped paying me and I lost everything. And, for many years, up until actually 2017, I did taxes January through April, and I would do everything because I'm not a typical accountant. Like, I'm a really good people person. I like to speak. I like to communicate. I love sales. And so I actually got involved in home-based business, a network marketing company that allowed me to realize, and I was actually working from home. Me and my husband had a vinyl signing banner company, a screen printing company, and I realized all the benefits of having a home-based business and started actually sharing with people that were in the network marketing industry how much money it was saving them in taxes by going from just a W-2 employee 1 year to being a business owner. And the statistics were pretty much worked out like this. The average household in America was making 60 grand a year, paying 14,000 in taxes. Take home was $46,000 a year. And the cost of living in America at the time, this is 2020 numbers, is far worse now. The cost of living was $53,000 a year. So the average American household is going to debt $7,000 a year to work 40 hours a week, 50 weeks a year, to take 2 weeks paid vacation. And so when I mapped together that, hey, I could take a W-2 employee, a family household, add a home-based business, help them save between $4,000 and $8,000 a year in taxes by just allowing them and teaching them how to attempt to earn an income, that was life-changing for me. And that led to us growing a really large accounting practice. I actually went full-time and decided I was not doing network marketing or any other business in June 30th of 2017. I went to a Tony Robbins event, changed my life. And I'm like, I'm playing small at this. Like, I really need to focus on it. And that's exactly what I did. And I started teaching strategy and helping businesses, because with me, when I lost my business in 2010, maybe 2011, the only reason I put it up for sale is because I was $2,000 short in cash flow. And I made an emotional decision, and I was going through a custody battle, and I decided to just sell it when I could have easily come up with a reason and a way to make that extra money. But in my brain, it was like, I can't do this. I don't have any support. And I think most business owners are the exact same way. And so I just love freeing up money for people so that they can use that money to grow their business or provide for their family or to create true wealth.
Oh, I kind of laughed a little bit before when he said, not the typical accountant, you're very social and this. Yeah, it's kind of true. A lot of accountants are there. They seem to be more like behind the desk, number crunching, not too talkative, really just numbers focused. Just give me the bottom line numbers.
Yes. Yeah, I'm literally on the phone. You get on the phone about 8 o'clock in the morning, and I'm on the phone till 7 or 8 o'clock at night. I have calls every 15 to 30 minutes. So we are super busy.
You kind of touched upon this before, but can you maybe clearly articulate how is the OTB tax or business different from a traditional tax prep firm?
Yep. So the traditional firm is just a preparation. So their focus is not to save you money in taxes. And honestly, the system was created that way. I'm not saying the problem is the accountant. We are not taught this information in college. Like I started college when I was 16. I graduated at 20 with a 5-year accounting degree. There was not a single class on how to save money in tax. I was taught by government employees to be scared to death of the IRS and to make my clients scared of the IRS. But what has happened over the last 25 years of being an accountant, I realized that what I was taught in college is not the truth, that having a home-based business is not going to allow you to be more audited. Never had a client audited because of having a home-based business. That, just certain things that we were taught, they're myths and they keep us broke. So, that extra expenses that we write off, such as travel or auto, are going to cause you to be more likely to be audited. That's a lie. It's not true. And so but the problem is every time you go to a continuing education event that you're required to go to every year, it's drilled into you like, hey, you don't want to be overly aggressive with a tax return. If you are, you'll lose your rights to ever file a tax return again. And that's what puts accountants in fear and doesn't allow them to actually help the client. Because you literally, when you become a CPA, you work for the government. And so I stepped out of that and said, you know what? I don't care. I am going to do what's in the best interest of the client. I'm going to obviously legally, morally, and ethically do everything that I possibly can to keep them as much money as humanly possible. And that's the difference. Like, I've been in this world, I've been in the accounting world, but I've also owned numerous businesses. So as an entrepreneur, I know what I can do. And as an accountant, I just combine that together and I help our clients understand how to force things to be tax deductible and literally guide them through that process instead of just saying, hey, give us your stuff, we'll do your tax return. We're not going to communicate with you. And here, sign this. That's not the way it works at OTB Tax.
So what are some of the top 3 tax deductions that home-based businesses usually overlook?
So I think the biggest thing is there's 3 reasons why home-based business or businesses in general overpaying taxes. Actually, so taxes are our number one expense. We actually will spend more money in our lifetime on taxes than we will on food, clothing, housing, and transportation combined. So it is literally, it's either the closest way to poverty or it's the fastest way to wealth. Like, you can look at it either way. But if you take the 3 things that the 3 reasons why business owners overpay in taxes. One is because they've missed deductions, and it may be that they don't know that what those deductions are. It could be that they're giving these deductions to their accountant and their accountant saying, hey, you can't take advantage of those. I want to write that off, or we need to take up some of that. That's one big reason. And they're maybe not keeping track of their expenses. The other reason why people are overpaying in taxes is that they're not structured properly. So LLC, TRIZ, and S-Corp is the best way to go when you are making more than $12,000 a year in net income. And that is huge. Like, I have so many clients that come to me and we go back and amend. I actually had one yesterday. They were paid $90,000 in taxes. We went back and we're getting back all of that money over the last 3 years because of the third thing. So they were structured properly, but then their accountant didn't show the amount of payroll that they should have. They showed too much in payroll for having an entity structure such as an S-Corp. And so we're going back and amending all of those things. And if you show too much in payroll on your S-Corp, what ends up happening is not only are you overpaying in payroll taxes, but you're also overpaying on your personal tax return for the QBI deduction. So, I think as far as deductions go, there's lots of things like continuing education and maybe meals and travel, but I think it's more along the lines of what the three major reasons why people overpay, and just lack of knowledge or lack of bookkeeping, or just lack of your accountant not caring and not actually looking at the tax code. And then on top of that, you've got the fourth thing is just strategy. Not having a conversation with your bookkeeper, or excuse me, with your accountant before you're in. So if your accountant is not willing to sit down with you October, November, December, when it actually counts and it can actually help you, you might want to find another accountant.
So I wanted to ask you about the things you were talking about, because I used to see an accountant and I just found it cheaper to use the TurboTax software. And there's other softwares like Act and
Yep.
that do that as well. What is the difference between using like a tax software such as TurboTax versus seeing an accountant? Are there any benefits, or is it like, so you can just do it yourself? Because, some people say, oh, I can just do it myself on a software. Why do I need to see an accountant? Are there benefits? Like you're saying, like,
So yeah, I mean, so the three main reasons is one, you're more likely to be audited if you prepare your own tax return. That's huge. You're not going to get an accountant to help you with an audit. That's even bigger, typically, unless you pay them $350 an hour to get involved. That's what we charge if we don't handle the audit. We include audit protection with our return. So there's that. The second thing is that you don't know tax code. And so you don't know what you haven't found. And an AI or a software is only as good as the information you give it. So if you're filing the wrong entity structure and you're overpaying in self-employment taxes, the tax software is not going to tell you that. And then the third thing is that what I have seen with TurboTax is that you may input information into that as far as deductions. And I've literally gone back and taken the same tax return that someone has inputted into TurboTax, and I've taken their same numbers, and it was $4,000 difference. I had another person that was $20,000 difference. It was literally like TurboTax decided not to claim the deductions that the client actually put into their software for whatever reason. I have no clue, but I asked that same question, what's the difference? And why in the world would you waste 2 or 3 hours of your life when you can actually focus on doing what you were designed to do and be focused on your business? So those are just, some things that I see. And I have had 3 that I can think of right this second that literally did TurboTax, checked the box wrong, got audited, and then owed $25,000 that they would not have owed because they checked the box that had nothing to do with their business. And then they did not put together their expenses. And when they got audited, they owed an additional 20 to 25 grand. So when you mess up over there and then they audit you for something else, then they're going to open that audit up to your business expenses, and you'll end up paying a lot more in taxes.
There's some businesses, especially smaller businesses, they think that they can save money by hiring a bookkeeper versus an accountant. What do you think that's like a smart move? What is it like a good idea to hire an accountant versus a bookkeeper? Because obviously, accountants can cost more money than bookkeeper. And so some small businesses that may not be making, even some large businesses too, they say, to save money, hire a bookkeeper than hire an accountant. Is there any difference between hiring an accountant?
We have a bookkeeping firm, so we have staff for bookkeepers. I don't necessarily see that we're any more expensive than an actual traditional bookkeeper, but there is a major reason to have someone who understands your niche, because it is very hard to train bookkeepers. I have literally gone back and redone bookkeeping over a bookkeeper, and we found $110,000 a year for a client for 3 years. So we went back and amended her returns, got all that money back. So I've had bookkeepers not list. Let's say I had a client that actually was a compounding pharmacy, and her bookkeeper told her that she wouldn't add in her HELOC. She borrowed money to build out her compounding pharmacy, and because it was in her personal name, her bookkeeper told her she couldn't put that on her books. She ended up overpaying $47,000 in taxes because of that. Typically what I see is that you need an accounting firm, right? And it should be a strategy firm, somebody who's focused on strategy. There's not a lot of us out there because my whole life is spent reviewing tax returns and having conversations with people. Whereas most accountants are spent just doing data entry and preparing tax returns. And so the strategy is super important. And then the tax return and then the bookkeeping department all in one. Because the bookkeeper, if you just have a bookkeeper and don't have a tax firm or they're separated, it's not our responsibility if you bring us bookkeeping that's wrong. It's not our job to review it. Now we do, but most people look at it and say, this is not my problem. I'm just using the numbers you gave me. And then you end up overpaying the taxes because the bookkeeper didn't know what they were doing, or they were putting things to the wrong train. They were putting things to shareholder distributions that actually was a business expense. And that's a lot, most of the time what I see on the bookkeeper side is they're not looking at it. They're looking at it more of a W-2 employee and say, oh, this is travel, or oh, this is meals. Like, I can't write that off. As a W-2 employee, no, you can't. But as a business owner, you can. So that's if there needs to be a merging of all of them, I believe. And you're going to overpay in taxes, and that's not a tax deduction, as opposed to the legal and professional fees that you would be able to write off for bookkeeping and accounting services. And let's face this, like, I'll just tell you, I charge $745 for a personal tax return with a business. That's not expensive. Some states, it might be a little bit high, but for the majority of states, it's not. Now, we charge a little bit more than that for corporate. We charge about $2,100 for corporate and personal, but that includes a tax strategy session. That includes audit protection, like, you're covered. And then we're making sure that, throughout the year that you're saving as much as possible and doing strategy on the back end. You get what you pay for. And if I were able to find you, let's say, if you hired us as a bookkeeper and I were able to find you $500 a month that you did not catch on your own, I would more than pay for myself.
Well, thank you very much for explaining all that. That's good to know, because I think sometimes people are not aware about all these things that you are aware about.
Yep.
And you talked about before about like having a home-based business. There's a lot of people that have like side hustles and trying to make some money on their side versus having a formal business. Like, what are the differences from a tax perspective from having a side hustle versus a formal, like,
Yep.
are
So
there
there's
tax
none. As far as deductions go, there is no difference. And in you starting a business today and Amazon, like, literally, you get the same deductions. It's just the more money you make, there are more benefits. There's credits and things like that. If you have employees, there are, maybe work opportunity credits, or, you're offering health insurance. There's lots of things that you get the benefit of as you get bigger. So there's just more things. But as far as a business owner goes, I'm working in my house right now because I just had a baby. I have a 3-month-old. My office, I have 12 employees that work in my office. I work at home, and I've been here for the last 3 months. So I get to write off my house. I get to write off my cars. I get to write off my cell phone, my internet. I actually get to write off my swimming pool because I hired my employee. My children are my employees, and I allow them to utilize my swimming pool. And so if I have an exercise facility, I allow them to utilize that as well. So I get to write that off. So all the things that you can do as a big business, you also can do as a small business. And the IRS says that if you're attempting to earn income 3 to 5 days a week for 45 minutes a day, then you are in business. And anything that you are using or spending money on to attempt to earn an income, that's the IRS says, okay, hey, now you can write that off on your taxes.
So do you know, or do you work with helping businesses to figure out when they should set up either an LLC or an S-Corp, or is that somebody
Yeah.
else? Is that part of like your strategy?
Yeah, that's part of the strategy. We do all of that. So we do LLCs, S-Corp elections, we do bookkeeping, payroll, taxes. We do everything that you need done. We sub out, if you need an operating agreement and things like that, but we definitely can make that connection for clients to make sure that they're taken care of. Even on a financial standpoint, we sub out to, fiduciary to make sure their retirement and all of that stuff is taken care of as well, if they want us to.
So can you provide with our audience maybe any tax saving tips for entrepreneurs who'll be maybe work from home? Is there anything like
Yep.
things that are generic that you can maybe like?
Yeah, I think one of the biggest things if you work from home that you should take advantage of is something called the Augusta rule. And it says that you can rent your house out 14 days a year. You don't have to pay taxes on it. And so what that looks like is maybe you have a network marketing business or a social business and you invite people into your home. 14 days a year, you do that. The going rate of whatever a facility is, like your house, let's say you go to a hotel, you ask them how much it would cost for a room, like an actual, a room that your hosting an event in, you can actually do the same cost for your house. So like for me, it would be about $10,000 a day for my house for us to find another facility equal to that. And so I can host events, have people come to my house 14 days a year, $10,000 each day is what I can actually pay, me personally, OTB Tax, my company can pay me. So that's $140,000 a year tax deduction. Typical homes are about $7,500 a year that you can get. That's a, $1,500 to $2,000 a year savings. Hiring your kids is definitely a big one. So you can pay your kids, you can hire them and pay them to do whatever you would pay someone else to do. That's huge. You need to make sure the structure is set up. Like you actually have to do payroll tax returns and issue W-2s. And then the other thing I think is just their structure, right? Know when to have an LLC treated as an S-Corp. And what I would say is that if you don't have an LLC right now, get one. It limits your liability. And then the next step, it allows us to then later treat that LLC as an S-Corp election when you start making enough income and weren't needing that. The thing that I see that is so bad for people is they don't set that up. And I had a client that actually overpaid $338,000 a year for almost 15 years in her company because her accountant told her she did not need an LLC. And so I could have gone back at least 3 years and gotten her, 120 grand or 900 grand, but she didn't have an LLC set up. That's one piece is that if you have been doing this all wrong, you've been, had a wrong accountant or you had somebody you've been doing your own tax returns and you do have an LLC and you're paying self-employment taxes, literally by having the S-Corp election, we can wipe out 80% of that. So we can go back and amend and get that money back. And then maybe as far as the other thing that I would just say is that make sure you're keeping track of all of your expenses, because if you're not doing that in some sort of accounting software, one, if you get audited, it does cause some problems. But the other is that you typically forget about an expense. And so if you're going through all of those transactions, then you're definitely going to make sure you're catching those.
So what do you think are some common tax mistakes you see new business owners make?
Just saying a structure, right? They're not having a conversation. I think a lot of times I see as well as partnerships get set up and there's not an operating agreement involved, commingling funds, you're using your personal account, business account and pushing those together. So just a lot going on there. Those are probably the main ones that I see.
What advice do you have for somebody who hasn't filed taxes in a few years?
So I would immediately call our office or schedule a tax strategy session. Like go to our website, otbtax.com, book a tax strategy session, get your tax returns filed. What most people don't realize is there's no law in this country to paying taxes. That's considered to be tax avoidance, but there is a law to filing taxes. And if you do not file taxes, that is considered tax evasion and could be prison time. And on top of that, you get hit 10 times worse by not filing your return than not paying your return. So you get hit with a 25% penalty for not filing the return, as opposed to not paying is 0.5% a month. So the max on it says 5% a month for 5 months. And then the penalty for not paying is 0.5. So it's just so much more significant.
It's good to know. I mean, what are some of the red flags that trigger the IRS to audit somebody for a home-based business?
There are no red flags that trigger any audits. But what happens is that if your income drastically increases or your income drastically decreases. So we've been taught that it has to do with certain expenses. That's not the case. It just has to do with, so if I go from making $10,000 a year to $100,000 a year or vice versa, then that's what triggers an audit. The IRS, if you ever actually pulled up a tax return transcript, you would see how little information the IRS actually gets from the tax software. They get a handful of transactions on the first page of the Schedule C, and then the other expenses, it literally is one number. So there's nothing triggering the audit. It's just there's a random selection of an amount of audits. And if you are a business owner, the likelihood was, this is a couple years ago, that it was 77% of over a 20-year period you would be audited. But again, we've had 15 clients audited in the last 25 years. We've won 75% of those. We've had 3 corporate returns because you're much less likely to be audited on a corporate level. It's about 10 times less likely. We've won all 3 of those audits.
It's amazing. I mean, can you maybe explain like how being proactive in tax planning and strategy can save, thousands in the long run? What are the advantages of being proactive versus, because I know some people that wait till the last minute, like the week before they have to file tax, and they start thinking about, oh, what do I have to do now?
Yeah, I've saved someone $10 million by strategizing in November. There's tons of things that you can do. But again, I mean, if you are just getting started, it might be $5,000 or $6,000. But as you get bigger and bigger, that one client, $338,000 in 1 year. So, and I've had one that we've saved almost $10 million in 1 year by strategy. So it just depends on how big your business is to how much money you can save. And, that's why we do tax strategy sessions. It is literally 30 minutes of me trying to go through everything I possibly can to free up money, go backwards and try to see about amending, if it would be worth it amending, and then moving forward, what we could do to save the money.
How early in the year should like a business owner consider seeing a tax strategist?
So typically so when we do a tax return on the back end, it always includes a strategy session. And then I would say, so twice a year, around April, May, really at the after April's up, right? So that gives your accountant time to do the strategy session. That's typically a good time. And then end of October, 1st of November. So that's a good time to make sure before year end that you're doing everything you possibly can to free up money. And you've got plenty of time.
Can you maybe explain a little bit about what is your approach when you're helping with a client build a custom tax strategy? Do you like review the records, and then based on the records and everything, you decide, hey, maybe you should, structure company, either like LLC or S-Corp, stuff like that?
Yeah. So I do all that. So they send in their prior year returns. They can send in 3 years. I'll review it. I'm spot checking it, seeing if there's any expenses that for their industry that seem to be missing. And then from there, it may be structure. And we're just telling them, hey, here's what I would have done. We can go back and do it. This is how much we charge. This is what you need to do moving forward. So it's what was done in the past, what can be done right now for this year, and what needs to be done in the future.
What type of records do people need to keep to make sure that they are, IRS compliant?
You're required to keep 7 years of bank statements, credit card statements, receipts if you have them. I'm not the greatest at keeping track of receipts. What I have learned is that the more you do bookkeeping, so if you do have a set of books and you are inputting those transactions and you've got a tax return that matches up to a P&L, a balance sheet, and general ledger, which you would pull from bookkeeping, and then you have bank statements. A lot of times the auditor will not ask for receipts, but you should have as many receipts as humanly possible over the next 7 years.
So, under somebody in the audience that's listening to this conversation today that has a home-based business and they want to save taxes, what's the first step you think they should take?
Book a tax strategy session. That'd be the first step. Essentially, if have an LLC, that would be first. make sure you're tracking expenses. Those are really the two things. And then book a tax strategy session so that we can make sure they're covered. And we set those up. You definitely want to make sure you're setting that up properly so that you don't, a lot of times people will do a partnership, like they'll add 2 members and then now they have to have a partnership tax return. So you definitely want to make sure that's a sole member LLC.
So if somebody is interested in, has a question about what you're saying, or they're interested in getting in touch with you, like having a tax, a strategy session or a consultation, what are like the best ways they can reach out to you?
So the best way would go to our website, otbtax.com. And right when you go in there, it's going to actually allow you to input your name and email address so you can get the 19 ways to save 10,000 or more. And then from there, you could click on the next link. It says book a tax strategy session. So that's it.
Well,
Daniel, hold on just a second. Are we almost in?
yeah, we're still recording, but you can don't I can edit. I'll edit it out.
Okay. But are we almost done?
Yeah, I'm about to say we're almost done.
Oh, okay. So
We'll be done like in 2 minutes.
okay, then let's do it. Let's finish it.
Okay, great. Courtney, I really enjoyed talking with you, but is there any other final thoughts you'd like to share with the audience before we wrap up our conversation today?
I would just say, at the end of the day, join the tax system that was created to provide wealth, which is the business owner tax system. Even if you are a W-2 employee, find a way to start a home-based business, whether that's network marketing, whether that's, lawn care. I don't really care what that looks like. I just care that you start something so that you can start focusing on keeping more of your hard-earned money legally, morally, and ethically.
Well, Courtney, I wanted to thank you so much for coming on the show today and sharing all your expertise and knowledge about accounting and tax. It was definitely very informative for me. I'm sure a lot of people in the audience do as well. So thank you so much for sharing everything with our audience today.
Thank you very much.